Options Tender. It is after the bell, Thursday, 2/25/21. Hope everybody stayed safe during this trading day. It looked like everything was falling off a cliff. Now, before we get into this information, hit that subscribe button at the lower right-hand corner, Options Tender logo. Hit the subscribe and then like the video so we can help other new traders and other traders that may just need a little bit of extra layer on their trading. Okay, so we're going to jump right into this. We're going to go over the SPX on the daily expected move. We're going to move on, put some trend lines there, and then I want to show you the ES on the 65-minute chart. But most of all, I want to show you how orderly this descent was. We're not crashing. The market isn't going to break to the downside 500 points. Everything was just in an orderly fashion and setting up for a really bullish trading coming up here soon. And I imagine that would be the start of the month. So I hate to break it to you that way. We're not going to see that tomorrow, for example. But so getting into it, let's start off with the SPX options expected move. We came down through the options expected move. The hedgers turn on, and we broke back up. Not surprisingly, we tested the 8 MA, couldn't hold over it, and so we have this bearish tendency in our head. We got to get above and stay above the 8 MA. It's really important. But what gave us a clue? We couldn't break back through this blue line with our yellow leading indicator. Came off of resistance here, headed to the downside. The histogram gave us a little fake and is now headed back south. So let's throw on some trend lines here. Trend is our friend. We broke through the major trend line when last time it gave us what do you call that? Not a fake break. Yeah, that's one thing, but just a stick win. And so we're breaking through and we close underneath the trend line. That is bearish. What I presume we'll have right here at the 50, we're probably going to get another somewhat of a bounce, and we'll check that out in the lower time frame. The RSI is now creeping underneath the 50. We're just, we're correcting. We needed this. We needed this bad so we could start trading back to the upside. We're not in a bear market. I mean, not at this time. There's no signs. We're just looking for a higher low. So getting onto the 65-minute chart, we're going to move over to the ES. All right, now I left everything off the screen, even though there's tons of stuff on the screen, right? So this was our wave 1. We still think this is a wave 2, but we're in a corrective phase of it. So I want to give you the retracements we had on there the other day. Let's go ahead and go to the bottom of wave 1, set up our retracement to the top of wave 1, and that gives us our retracement here. We retraced off to 50%. Yeah, it's not super shallow. It's not unheard of, but what we didn't know is if we were going to go way higher at this point. All right, sorry about that. We had somebody come at the front door. Let me start. We were at the retracement. So with that wave 1, the retracement, we're looking for an ABC correction. Now, we actually got that correction from what we thought probability A, B, C. Okay, that could have been done. 50% retracement, check. And we could have moved higher from that point. Now, in my opinion, this is a much better thing because we can move higher if we get a deeper correction. It gives us more time to move to the upside. Now, so after that, we had an A, B, C move. We thought it could be a 1, 2, 3, and then 4 worked perfect with this pullback, right? Well, this pullback told us all the information we needed, and I know I missed a lot of this. But a wave 5 could have been after. That is our telling that we made a lower high. And this is what we call a bull trap because we got over our pivot and then moved down after that. So what are we looking for now? Well, this is just a much bigger correction. This is our first wave A. And now we have a correction B. And now we need to make a C, which will conclude our wave 2. Unless, this is just not in the books for me, for what I will show you another wave count that goes much deeper. it's possible, but I'm not sure that's going to happen. So if we get underneath the wave 1, that means that this wave 2 is invalid and that we have something else happening, meaning that this is maybe end of wave 5 and now we have a 5-wave count down, and that would be a much bigger downtrend. So all we're looking for is the A, B, and just a smaller A, B, C inside. And check this out. You know, the market loves to work in symmetry. So I went to the bottom of this A-wave to the top of it. And that's a 4% move. And then I took this and I moved it over from the beginning of our wave C. And guess what? That perfectly gives us our 61.8 normal retracement. This wave was so big, this wave 1, that the wave 2 just should have been big in comparison, and it's typical. 61.8 is a typical retracement for a wave 2, and so that's what I think we're going to end up doing. I think we're going to bounce here for our smaller minute wave A, and then have a B come up. It can come up to 38.60 by tomorrow, maybe. By tomorrow come up to 38.88 again. We don't know that, but just keep an eye out for a smaller wave B, and then we're going to add some puts down to the 61.8 retracement, and that should complete our wave 2, and now we're looking up. Okay, so what is that huge bearish move that I'm talking about? Well, that would mean that this is wave 1, not A, 2, and then a much larger wave 3, probably down to the monthly, a bounce 4, and then much lower wave 5. And that was kind of what I was looking at. At some time, I had a fuchsia line here and one a little bit lower. You know, it's just possible. It's possible, but I don't think so. I'm more bullish than that. So 2, 3, 4, and 5, maybe the bottom to fill this megaphone. So that would be our bearish bet. If somebody else really feels like we have to correct much, much lower, then that's what's going to happen. I'm still leaning towards the micro bearish, but bullish in the long run with the wave count that I have. So, okay, sorry for taking all this time. Let's go over to, I want to show you how well clean this retracement, or this retracement has been, how orderly, I guess the right word is. And if you look at this, we have the fuel cell we were talking about this morning, came back to the trend line, and all of this decline, that's it. Not much, right? Big C, these are strong charts. We're still in these. We have these out 25, 30 days out in our spreads. And our in-out spreads, if you're interested in that very conservative set it and forget it type trade, I'll pin that up on top. And look at the big C, had that big pop, and that small retracement. I mean, yeah, it might be 5%, but it had 10% the day before. Okay, so BTC didn't come back much. It's not influenced that much by the market, but check that out. Not small move. BA, we're still in this. BA, huge move in one day, and took about half of that away. Twitter, it's the last one, and then we'll do some trade ideas in the morning. Okay, Twitter, we broke out here. We're out of Twitter already. We hit our goal, our percentage gain, and when it gapped up, we got out of it. But just beautiful. It's still moving. So, okay, that's all we got today. Hit that like button if you want to subscribe. There's that little icon down to the right side, right corner. That's my Option Center logo. You can hit that, and there's a subscribe button there. All right, thanks for visiting us. We'll see you in the morning.